Welcome to the Investment Banking Leaders Podcast, brought to you by the Investment Banking Leaders Club, your exclusive access to the industry's most successful leaders. These experts have closed thousands of deals, generating hundreds of billions of dollars, and they're here to share their strategies, insights, and leadership lessons that can fast-track your career. But the learning doesn't stop here. Join the Investment Banking Leaders Club at ibleadersclub.com for even more exclusive insights, leadership frameworks, and career accelerating resources and events. Thanks for joining us, and best of luck on your growth journey. So today I'm pumped to be joined by a real innovator, a true entrepreneur that is really disrupting the traditional banking model. I'm joined by David Frank, the founder and CEO of Stonehaven. Now, from starting a placement agent business at just 23 years old to building one of the most innovative affiliate platforms for financial intermediaries, David's journey is nothing short of entrepreneurial brilliance. Now, today, Stonehaven powers a growing ecosystem of over 150 affiliates, blending investment banking, private capital advisory, and cutting-edge technology, and all with a really clear mission: empowering independent professionals with the tools and infrastructure they need to thrive. So I'm really excited to get into this with you today, David. Thanks for joining the Investment Banking Leader podcast and being here today.
Thank you, Peter. I'm really appreciative of the opportunity to present on your podcast. I'm a big fan.
Excellent. Thank you. You grew up in Denver, you studied at Michigan, and you entered the investment banking world at Robertson Stephens. Can you take us back to those early days and walk us through what led you to start your own business at just 23 years old?
Sure. Graduating in 2000, I think the technology wave that was happening at the time was really alluring, and that pulled me into investment banking in San Francisco at Robertson, which at the time was the largest investment bank in all of San Francisco by far. And within 2 years of me joining, really within about 18 months, Robertson shut down. So that was never part of the game plan. I thought I'd at least have a 2-year analyst program to figure out my next step. And it was literally about 1 year into that job that Robertson shut down. And at the time, San Francisco was turning into a challenging space with the Nasdaq down 75% plus. And so I had to figure out what to do next. And I grew up with a very entrepreneurial father, and it was really a foregone conclusion that both my brother and I would be entrepreneurs. It was only a matter of when. And I found the opportunity with a colleague of mine at Robertson and a few other people that we joined together with. And we decided to launch the business. Candidly, at the time, I don't think I really, at the age of 23, knew what in the world I was doing. Who does?
Sure.
But I was willing to kind of jump out, and I was motivated at that early stage to build something out of nothing, to build equity, to learn rapidly from building everything from scratch. And I saw that I had a real opportunity. And so while I had really smart colleagues, I didn't really have any mentors who actually had built an investment bank or placement agent business, and forced me to really think through everything on a first principles basis and quickly learn through trial and error. So, for example, I had no idea how to run a roadshow. And from how I thought about it, I thought I would just run my own roadshows, David Frank style. And so every other week, I literally was on the road meeting one-on-one with investors as a 23-year-old, 24-year-old. And you really had to present yourself as being much older than you really were at that stage, and worked incredibly hard. And in the early 2000s, I cut my teeth raising capital first for hedge funds, and then expanded into a wide spectrum of alternative investments, and then expanded into more investment banking activity over time. In the early 2006, 7, 8 time period, we started building our affiliate platform. And it was not an industry that was even clear at the time. And the way it came about was really solving a use case in the industry. And my goal at the time was to attract people who would help me execute on the capital raises I was out in the marketplace executing. And so I would find talented placement agents, bankers in the marketplace who could help me execute on my deals. And then many of them needed to have a broker dealer. And so I decided to bring them on to ours. And then we had to figure out how to support deal flow that they wanted to originate that I wasn't leading. And so it just gave birth to figuring out how do you originate, how do you execute, how do you build infrastructure. And so it evolved from there.
Well, I love it. It's a great journey. As you said, you weren't expecting Robert Stevenson to close, and it did, and then yet thrust you into the world of entrepreneurship really early on, and clearly learning as you go, a lot of grit, a lot of hard work, and obviously looking to identify pain points. So thanks for sharing, and it definitely helps us connect with your journey more. As you said, you started Stonehaven as a placement agent, and then you pivoted to become this powerful tech enabled platform. You've talked a little bit about that, listening and understand how you were working and looking for affiliates to help with your deals. So what was the biggest turning point in the journey? What motivated you most to pivot into building tech forward infrastructure and moving away from being a placement agent business?
So there was a couple of pivots in our business, and I think the first pivot was going from being just primarily executing my own deals to then building our affiliate platform to go help complement it. But that was the affiliate platform back in like around 2006. It's really a side project. The main project was originating and executing our own deals, and I think that was foundational to building my knowledge base as well as my partners who joined me along the way. We were in the business that our affiliates were in, and we were very successful at that business. We eventually saw a lot of challenges actually building the affiliate business and executing for the affiliate business after having some incredibly successful raises. We raised several $billions in around 2010 through 14 on mandates we had originated and executed through affiliates. And I pivoted for a while actually into building an internal execution team, a team of 6 that we really were originating, executing our own deals. And the affiliate platform for that time period was on the side. It was still functioning, but it represented less than 20% of our net revenues as a business. And it was during that time period we started building all the technology for our internal team, really building out the origination functionality, building out kind of our core infrastructure and tech model. And it was in that time period that we were running that business and realized that if we wanted to really build out our vision for what we saw as a huge opportunity, that we'd need to go pivot again. And we decided that there was really this huge gap in the marketplace where there's 5 to 10,000 independent investment bankers and placement agents. We were supporting about 20 of them at the time. And we saw that all of them, there's this ecosystem, this cottage industry of broker dealers that were really providing purely a compliance function for independent contractors. And in reality, those people wanted a lot more than compliance. They wanted the entire spectrum of infrastructure. They wanted technology. They wanted data. And as important as all that infrastructure, they also wanted to collaborate. And we were building kind of the kernel seed of that tech stack. And we decided if we were going to be successful, we'd have to go all in on it and achieve scale. And so we started building out a real operating system and in moving our affiliates into our tech stack. And when we did that, part of the initial motivation was our affiliates wanted to leverage our CRM architecture that we were building and really optimizing. And then to do that, we had to figure out a data model for them to collaborate in one common set of investor, lender, buyer data. And it started where we essentially open sourced our own data to our affiliates. And every affiliate that came into our system, we integrated their data and really made it like a mosaic approach. And then we started rapidly scaling, and that's when we started building out all of our reg tech, legal tech, other workflows to facilitate everything relating to their compliance, to contracting, to due diligence, all of the ongoing workflows to support mandates, and all of the kind of CRM architecture that would make it much more robust and integrated, and transaction closing. And as we did that, we realized that in our first kind of iteration of our business, Stonehaven was the central originator of mandates and pulling people in to collaborate. And we really moved away from that to having our affiliates be originators and collaborating with each other. And so that became a huge part of what made us successful. And that's really how we pivoted in that time period. And it really required, from a DNA perspective, that we kind of transition our mindset from being finance professionals to being still finance professionals, but also embracing technology and becoming like a FinTech type of a firm. So our legacy DNA of being finance professionals really informed how we build around the use cases that our affiliates need in a way that somebody who'd never actually been in our space would not understand. But it required thinking quite differently to build data models and user interfaces and complex workflows. And I think along that way, too, most of the finance industry handles a lot of workflows through scheduling calls and random kind of ways in which emails go back and forth and random forms and a piecemeal approach to all kinds of different software and data models that usually don't integrate well. And our approach was, let's build one completely vertically integrated operating system. And so when I use the term operating system, I'm describing a combination of infrastructure, technology, and data, where it's all integrated on one tech stack. And then layered on top of that is our ability for our affiliates to collaborate with each other. And that meant we had to build everything in one place, which I think made it a lot more difficult than cobbling together a bunch of different tools. But I think that really difficult foundation building has enabled us to be much more successful today.
It's fascinating. I love listening to it and looking at the key points and how changing, as you said, from finance really to tech mindset. And I've had a lot of guests who are really successful in finance and have moved on and built their own things, but you're the first one that's really in this fintech space. And I love the fact, I took a note here, that you were really in the shoes of the affiliates. You understood it. You looked for the pain points, and organically from there, and then with the right focus, you're able to grow something that had real value. Fascinating, as I said, true entrepreneurship, and I love what Stonehaven's doing. For the listeners who are new to the model, you've touched on a few of these aspects, but can you explain briefly how the platform works for affiliates?
Yeah, so let's take a step back. So, what's an affiliate, first of all? An affiliate is an independent investment banking or placement agent boutique, a firm that, as an investment bank, raises either equity or debt capital for corporates, does M&A, and does secondaries. And on the placement agent side, that's raising money for all types of asset management firms, from real estate to venture capital, private equity, private credit, hedge funds, the entire spectrum of private capital markets. So each of these groups truly runs their own independent business on our platform. They are independently branded. They have the full ability to originate their own deal flow, set their own commercial terms, and then they leverage our core infrastructure. We're a broker dealer. So all of our people are on our broker dealer, or if they're outside the US, they chaperone on our broker dealer. And they then operate inside of our tech stack to a large degree to go run their business. And they then can collaborate with one another. So we today have 150 registered reps on our platform and growing. We're looking to scale up to several hundred. And we currently support about 200 companies with a roughly even mix between corporates and asset management firms across our business. So hope that helps explain what the affiliate platform is.
Yeah, no, definitely helps. And thanks for taking a step back and explaining the affiliate much clearer too. So let's think about that. What does the typical journey look like, maybe from someone from a traditional investment bank, either a bulge or a smaller firm, and then rolling into your independent ecosystem?
So Stonehaven's really a launch pad for entrepreneurship. And about roughly 40% of the businesses that join our platform are launching their business from scratch here. So
Okay.
we're really a platform of where we ourselves are entrepreneurs, our affiliates are entrepreneurial, and by and large, we're representing highly entrepreneurial companies. So it's really this whole ecosystem of very self-motivated people who are building businesses and aligned with clients. And I think as far as when they decide to launch, or and they can also bring their business over to us, either from another broker dealer, or sometimes people shut down their broker dealer and run on our platform. Um, I think they really need some combination of origination and execution capabilities. I think once they're really ready to go, we're here to support them. So our affiliates don't work for us, we work for our affiliates. And the real question is what exact business model are they seeking to pursue? Where exactly do they want to originate? How do they want to set terms? What prospects do they want to pursue, whether those are investors, lenders, or buyers? And then how do they want to have an edge in that market? And so we're really there to support every aspect of that. And beyond being this operating system collaboration platform, we're really like a silent partner for our affiliates, constantly acting as a sounding board on every major decision they make. And we're here to really support them, and we're aligned with them.
Nice. I like that. And when we spoke before, what stood out for me is you're entrepreneurs building a platform for entrepreneurs to operate in, that are helping other entrepreneurs to make their deals. So this kind of entrepreneurs playground for deal makers is really stuck in my head. Those that can originate, execute, and have an entrepreneurial flair, let's say, thrive in the model. Are there others? How does it differ from the culture of a traditional investment bank, other than those things? Are there other differences at all to operating within Stonehaven compared to that traditional model?
It's hugely different. So, first of all, I think if somebody's operating a larger investment bank, typically they're put into a much more narrow industry focus or practice area. And I still think that a lot of the most successful affiliates do choose a niche. But I think quite often, if you're working at a big investment bank, you're really constrained as far as who exactly you can work with. Two is quite often banks require really large minimums to even engage. So they'll have sometimes $1 million to $5 million minimum fee structures to work with a company, which really knocks them out of a lot of the lower middle market quite often. And if you're running a boutique, quite often a $500,000 to $1 million fee, for example, can be quite lucrative if you can do one or more of those deals a year. And so I think there's a huge spectrum of the market that they might not focus on, that they can focus on here. And then I think the ability to set commercial terms is quite different. For example, an affiliate might set very different retainer structures or other types of engagements with clients than they could at a large investment bank. They can also build a consulting relationship with a client pre-market execution or even during market execution that can have a wider scope than purely a transactional function working on our platform. And then as far as how they execute, look, quite often at investment bank, you have very specific parameters about who you can pursue and how. And we have great guardrails to make sure our affiliates are on track from a commercial perspective, but we're supportive of a much wider range of commercial execution strategies than I think your typical investment bank will allow. So that does change things. I think the affiliates, though, have to build their own brand. And so I do think what's interesting in today's world is most companies really pick people based on a personal brand of a banker or a small group of bankers. And I think while there's definitely a whole large cohort of companies that will only work with the largest kind of brands, there's tons of incredible bankers who build their own reputations and can bring their business wherever they go. So I think that's a great area where boutique bankers can really thrive.
I agree with you. That brand, the personal brand of the bankers is so key, particularly leaders, and constraints for clients, the minimums that are imposed, commercial terms, the retainers, consulting relationships. I could definitely see how it differs and why it can be enticing as well. You talked about the platform combining deep infrastructure, CRM, pipeline management, legal workflows, as well as the community and collaboration tools that you have. I'm really interested in how that shaped deal flow and execution speed for your affiliates, because this is a top priority at the moment for many leaders I speak
Sure.
to, and they're looking at AI at how they can help that. So, how does it shape that deal flow and execution speed for your affiliates?
So I think everywhere besides Stonehaven, people have a whole wide assortment of different tools they're using. So like generally a banker at a large bank might have a CRM over here, they have workflows for originating over here, they have different ways in which they will contract. When they close transactions, they have different integrations with their financial team. We've approached it quite differently. From day one, pursued building a vertical integration of every aspect of the platform. So if you look at the entire life cycle of a deal, it starts with contracting and actually goes, let me go back a step. It actually goes with prospecting potential clients. So we built fully all of the pipeline for how to pursue clients right inside of our system. As soon as you have a client at a certain stage of commercial conversation, The next step is building a contract. And on our platform, actually, let me start with how other people do it. Typically, they'd have a variety of templates. You'd start customizing the template, and then you would send it back and forth with in-house legal counsel to make sure you got it right. On our platform, we've invested 5,000 plus development hours just into building legal tech to build contracts. And so our affiliates can go right inside of our system, click build a new contract, pick what kind, and then from there, we have 6 modules to build out all the commercial terms. And so you can say, I want to build my success fees this way, retainer this way. And it's a very smart workflow that guides you through building any commercial term. And when you're done, you literally click generate and it builds your contract right away. Next step is due diligence. And I would say most banks and other types of broker dealers have a process by which they ask you to submit certain information and then they come back to you after a certain period of time with questions and comments. We've really gone much deeper and built an entire information exchange due diligence process right inside of one workflow. So we know exactly what we're looking for, and there's a sequence of questions. So, for example, if you're representing an asset management firm, we might say, are you SEC registered? And they say yes. And then we would say, upload your ADV1. And then they upload it. And we'd say, have they gone through an audit? Yes, no. Okay, yes, you have gone through an audit. Have they had any comment letters from their audit? Yes, upload them. And then you go through the next section. Have you gone through any litigation? If you say yes, we're going to upload it and go through a series of questions on any litigation. And we know exactly what we're looking for, and we'll highlight certain red flags of where we'll dig deeper. But if there aren't red flags, we're moving forward quickly. And so we onboard 35 to 45 new clients per quarter on average. And we're typically handling 75 plus onboardings at a given time. And so we have a 5-person mandate management team that's fully dedicated to this effort, but we have the tools to do it faster than elsewhere in the market with much higher quality. And then the next step would be, all right, I need to go develop a target list of prospective investors, lenders, or buyers. That's where they could leverage our 80,000 plus companies in our database, build out their target universe, immediately turn it into their pipeline. And from there, they're focusing on execution, where they can track their pipeline, their activity, their transaction data. And from there, when you're ready to close a transaction, that's integrated right inside the system. You never leave the architecture to go through compliance workflows. As soon as you close it, our finance team is immediately integrated into the system, so we're billing for you. And also all the workflows for collaboration too. So if you are looking to identify people that might help you execute on a mandate, it's all built in the system. The tools to contract are built in the system with those people. So it's 3 clicks and done to build a collaboration agreement. And then all the workflows to run the entire process, from submitting target lists to real-time pipeline and activity transparency, is all built natively into the system. So our goal is always to move as quickly as possible with super high quality. And a lot of that's required, I think, thinking through, if you were having a meeting or an email exchange with an affiliate, what exactly would be the decision criteria to make the next step? And if you can build that into your code, into your workflow, and so that requires hundreds and hundreds of hours of just dissecting how you think about things. And then we also have a 24-person team that supports our affiliates. So it's not as though it's all tech. We're on the phone or on Zoom all day long with our affiliates, helping support them. And so I think it enables our team to focus on higher value add functions than more kind of administrative tasks and going back and forth.
Well, I know how intentional you are and the hard work that's gone into it, and it really shows in how you explain it and the passion you have for it. And it makes so much sense. Building a platform that cuts down deal time, having that in place, it's what I hear from leaders all the time. How can we cut down deal time? In fact, I was speaking to Adrian Millen at PJT, he heads up the secondaries team there, and he was explaining to me that's one of the big processes they're trying to take the bookends of the process and shorten it so they can be more and more efficient. So super interesting. Thanks for sharing that. We've talked a lot about the platform. I want to talk a bit about the community side. As the founder of the Investment Banking Leaders Club, that's something I'm working hard at to build that community? I know
Sure.
you've been running 50 events a year, connecting affiliates across the platform. How important is that community building element to your success with Stonehaven? And secondly, and maybe a bit selfishly for me, how do you maintain it as you scale?
So community is critical to who we are. I think it's a very big element. There's a lot of actual tactical reasons why community is important. And I think it's also people want to be part of a larger ecosystem as entrepreneurs. And so, first of all, why does community even important to our affiliates? Um, the first is collaboration. So, an affiliate on our platform can originate a deal and attract other affiliates to work with them on that deal. So, in that case, collaboration unlocks execution capability, which is really hard to do. And it's something we've unlocked more than anyone else in the market. On the flip side of that, if you're an affiliate, you can also join other mandates. And so you don't have to originate all your deal flow, and you can plug into more mandates in a more streamlined manner on our platform than anywhere else. And so there's real commercial benefits to our affiliates of collaborating. We've essentially created a marketplace for talent. And so if you're an affiliate and you're originating deals, you want to attract high quality affiliates to help you execute. And if you're somebody looking to join other mandates, you want to make sure that your reputation is really strong as somebody who also executes very well. And so we really do a lot to build that. There's a lot of tools we build for it, but to get away from the tools and the tech, we host events all the time. So we host monthly affiliate partner calls. And amongst other things, we give any new affiliate a speaking slot on those calls to introduce themselves. We also roll out new clients on those calls. We give them 10-minute speaking slots. So it really helps launch a mandate into our platform if that's what the originating affiliate wants to do. And then we also host events for asset classes. We do that on a quarterly basis. So we host them for real estate, hedge funds, closed-end funds, direct deals, and secondaries. And so that gives people that are in specific domains the ability to speak in a lot of detail. And we have them, certain affiliates also do spotlight presentations where they'll bring knowledge of a specific topic to affiliates where they kind of showcase something in particular they want to talk about. Sometimes that relates to affiliates, to mandates they're working on. And then we also host in-person events. We host a couple flagships a year, both in New York and Los Angeles. We have usually 75 to 100 plus people at those events. We now are enabling our affiliates to bring their clients to those events. And then we also host pop-up events all the time. When a marketplace or when a community is thriving, it's not all because it's connected to the core, the center of it. It really means all the nodes are engaged directly with each other. And we have, as far as these arrangements where if our affiliates work together, that's called a cross-marketing agreement. We have over 430 active cross-marketing agreements today, and we're signing an average of 5 to 15 per week. So it is a constant thriving ecosystem.
Thanks for sharing some of the insight. And I've definitely taken a lot of notes. And I really agree with you on the nodes within the community. It's not about the central, it's about how they communicate and how they build that community themselves. And that's definitely something I'm trying to achieve with the Investment Banking Leaders Club. So thanks for the insight.
Mhm.
Let's talk a little bit about the transition moment, if you will. So we have a lot of bankers listening in many countries around the globe. We have some seniors that may be tempted to set up on their own. When does it make sense for someone to leave a larger platform or a mid to large bank and go independent from what you've seen?
So I think it's having a combination of strong origination and execution capabilities.
Yeah.
I think somebody has to be very self-motivated and confident in their own ability to build their own brand and be in a position where they can win business, not because of the brand behind them, but because of their personal brand. And I think it's hard for people to entirely know until they do it, but it does take a real degree of self-confidence. If you're going to go off on an entrepreneurial journey, you have to really be ready to sacrifice short-term for a long-term gain. Usually you could make more in the first year by staying at an investment bank, but in the medium to long term, it's not even close. You can make a lot more money being independent if you're successful. So I think it does take some transition. You have to go out and execute on that. And then I think you have to find people around you that you might want to partner with. You don't have to partner with other people on our platform, but if you really think you can be stronger with other people, sometimes it's building your own partners that you want to go out into the marketplace with. So I do think it's much easier to be an entrepreneur earlier in your career in certain circumstances, given those sacrifices. But I think there's also a balance between that and being senior enough and later stage enough in your career to have the relationships and execution capabilities to go do it. So finding that right time in your career to do it, I think is really critical.
But it's interesting because a lot of the leaders I speak to, they share with me that there is this rise of boutique firms and this rise of that hyper focus on a certain sector or industry and that expertise and how that can be spun out into something more meaningful. So I find it really interesting. And I'm sure listeners might be wondering about economics, right? Let's be honest, that's a big
Sure.
part of it. My understanding in a traditional bank is you might get 20 to 30% of the economics on your deals. How does that compare to the payouts on your platform?
As you described, a bank will take roughly 70 to 80% of the economics in our deals. Stonehaven takes between 5 and 15
Mm.
typically. And so the economic split is totally upside down. And that also means that you can produce what's called half as much revenue as you would at a bank, but with your payout, you'd actually make more money. And so it's really a flip of the in-house model. And so you don't have to have the confidence that you can produce as much gross revenue as you would at a big bank. You have to say, hey, if I had, let's call it 85 to 95% of the economics, could I do half as much business and then control my destiny and control which clients I work with and have a wider mandate? So our affiliates, they pay us, just as I was mentioning, a revenue share of 5 to 15 typically. There are different models we have. We charge a monthly fee for our platform. That's either 250 a month or 1,000, depending upon different packages. And we also have certain expense pass-throughs.
I can see why it's enticing, as you say, turning that economics of the deal on its head. So definitely understand there. It
Mhm.
would be remiss of me not to talk to you as a fintech leader and entrepreneur about AI. It continues to be a hot topic for many of the guests. How do you see it transforming how independent deal makers work in the next, say, 5 to 10 years?
So we really break it down into a couple of different areas as far as how we're thinking about AI and technology in general. And I think AI is just one thing in your tool set to build tech. It's not the entirety of the tech stack. And I think AI is most powerful when you're taking unstructured data and turning it into structured data or doing really complex kind of logic. It can be really helpful. Right now, very focused on using AI to build internal tools where you can take large amounts of data and use it to make decisions quickly. And a lot of compliance, due diligence, other kind of workflows lend themselves very much to this because it requires, I'll just use one example. So if you're approving marketing materials for going to markets, they have to be fair and balanced. They have to have certain disclosures. They have to present certain information in certain ways, such as track records or other information. Risks have to be disclosed, etc. And usually that would require somebody in-house to do a deep review of that. We've built AI, for example, it's like a 17-page prompt that has
That
uh,
it?
17
Wow.
page prompt that basically we can ingest materials in it and have it go through the entire framework, go through Rule 2210 in FINRA, go through other kind of ways we have it, break it down a certain way and provide our output. And then we still go over an internal review of that. But that gives an incredible starting place for a professional to dissect that over starting from scratch. That's just one of many kind of examples. And on the tools, the next category is tools for our affiliate partners that we're building right now. And so that can be all types of ways in which we enable them to see their data in a smarter way. For example, you could take all of their activity history. So all of the notes, tasks, events, emails, etc., that they've had, and say, read all of this and summarize the history of their relationship and the open items. And that's a really great tool to do that can really help take 15 or 20 interactions and boil it into one summary. And that can not only be helpful for the person executing, but it can be really helpful for a person managing somebody executing or a client. We're very much working on that. to build tools around that, to clean data, to merge duplicates, etc. And they were also working on smarter workflows to integrate how our affiliate partners interface with our infrastructure team, our entire core infrastructure, how they collaborate with people, how they collaborate with, and those people include their partners, clients, and prospects. And so all those types of tools we're building, I think it's a never ending journey. We're really trying to now embrace how to use technology for our affiliates to integrate on a deeper level with clients, which if you look at almost any investment bank today, the entire integration model with clients is sending emails with Excel spreadsheets back and forth. That is where the entire industry exists today at the largest banks. So we're really thinking much deeper about it and thinking, how can you give real-time information and enable a synchronization of workflows between an investment banker, a placement agent, and their end client.
And do you see it going somewhere different in 5 to 10 years, or just building upon that in more and more ways possible? What's your take there? What's in the crystal ball?
So I think the playground to build, so to say, of like how wide of a scope, it's actually hard to keep your scope narrow, I'll say, because really, if you think about Stonehaven, we're really a capital markets platform that is building tools for companies, investors, lenders, buyers, and intermediaries to do everything they need to do to execute capital market functions. So we don't lack areas we want to go focus on. The hardest thing in our job is to actually narrow down where to focus. I do think it's really building deeper integration with clients and also ultimately building into an investor facing or investor lender buyer portal. So like a data room, enhanced data room kind of structure. We're also thinking deeply about how firms can leverage our tech stack to run their own in-house functions. So for example, if you're an asset management firm, how could you leverage our tech stack as your primary CRM and data model and then integrate with multiple placement agents at the same time and have a deep integration? So we're calling that enterprise. And that's something we're just now rolling out. And we think that gives us a long runway to go pursue. And I think we could also build tools for investment banks that aren't on our broker dealer as well. So that's a very wide area to go play in.
Nice. Well, wish you the best of luck. I'm sure that's going to be another exciting period. As an entrepreneur, I want to tap into that a little bit. Entrepreneurship always sounds exciting, but the reality is it can be overwhelming as well. And I know you and I talked about how focus and energy can be the toughest parts of that entrepreneurial journey. And you just mentioned focusing on the thing we don't lack, things we can work on. It's really picking the right thing. So as an entrepreneur, how do you help new affiliates or other entrepreneurs on your platform avoid burnout and maybe stay aligned more with long-term success?
It's an interesting question. I think different people have different pain thresholds. And I do think our industry requires, and actually, I just say entrepreneurship in general. I think anything you're building, whether that's in business or even outside of business, I think requires a high pain threshold to really be a builder. I can say the things that work and help me. So exercise is critical. I work out 5+ days a week. I love to cycle. I love to ski. I love to be outdoors. Two is, and maybe this is even just as important as exercise, I think is having a really good family and home life is critical. I think if you're going to go tackle a huge amount of work in the outside world, your inside world has to be a real haven for you to come back to. And so having a great kind of family life is really important. And also I'd extend that to friends. Having a network of friends that aren't your colleagues that you can really lean on and talk to about the things you're going through, which for me, I get a lot of that through an organization named YPO. Having that sounding board of other people who are also building was great. And there's other organizations out there, and that's just been critical to me. We've actually built a whole ecosystem within YPO. So I'm the chair of the investment banking group. I think just taking a step back, I think being realistic, if you want to go be a builder, you have to realize that taking hits and running down dead ends and running into a wall and getting bruised is part of the daily journey. It's not like an exception, it's the rule. And every single entrepreneur, I think that the biggest factor of success quite often is your ability to stay in the game and to keep on getting up from hits. And so I think that really comes down to grit. And I think grit can be learned or grit can be embraced or improved. It's a muscle. that you can pursue. And I think having people around you that also have a high grit threshold, I think also is helpful. But then I think taking time off is good. And the other thing I'll mention as far as burnout, I think actually, interestingly, staying organized helps a ton. So quite often when you feel burnt out, I think you have some anxiety hanging over your head that you just don't even know what it is. And the more you actually get it out of your brain, write it down, organize your thoughts, talk about it, quite often the thing that you're most have the highest anxiety about is the thing that you need to focus on. And so I think leveraging that anxiety that goes with building and leaning into it sometimes as much as it's uncomfortable is what's required to focus your energy and get through whatever that challenge is that you're facing.
Nice. Well, thanks for sharing. I think there's loads of great insight there, and a lot that I agree with, by the way. The exercise is a big part of my daily routine. And I actually started this year with a bigger focus on gratitude and affirmations. And I've really found how that's helped change my mindset and help me deal with the hits, as you mentioned, or build that grit, that resilience that you're looking for.
And let
And
me
as
mention
a,
one more thing on that too, Peter.
yeah,
So a lot of what burnout is, one thing of burnout and stress is cortisol.
yeah,
Cortisol is a real chemical in your brain, and there are certain things that really do flush cortisol out. And so, for example, I like to go cycling 20 to 50 miles every weekend, and I just feel so much better. Like
yeah.
spending 2 hours outside, getting all of your energy out, and it really does flush your brain.
Yeah.
And so I think that's critical.
I'm not quite at that level of miles. I'm more of a football player and gym, but I can understand why being outside on the
Many
bike
ways to
can
do
really
it.
help.
Yeah.
Yeah, exactly. Hey, believe it or not, David, we're coming towards the end. So just a couple of questions to finish. The
Sure.
listeners of the show will know I ask these to all guests. So first of all, I'm a big believer that leaders are readers, or call it what you want these days, podcasts, other materials. So
Sure.
what do you recommend that's had a big impact on you in your career?
So I'll break it a couple different categories. So first, I'm a huge fan of podcasts, including
Yeah,
yours. I haven't missed an All In podcast in probably 3+ years. I'm
good.
religious with All In. I love a bunch of others. I'll just mention a few: 20EC, CBG2, as well as Lex Friedman. Tim Ferriss and Joe Rogan have a lot of great podcasts. It really just depends on their guests, but I listen to podcasts religiously. Two is I listen to books on tape. I do read a lot, but I listen on average more than an hour a day of books on tape. And I just do it all the time. Whether if I'm exercising, I'm listening to a book on tape. If I'm making coffee, I'm listening to a book on tape. I just do it. If I'm in the car, I do it. And I really love biographies. And in the last year, I've really focused on pretty much I've read all the Walter Isaacson books, like
Yeah.
Steve Jobs and Elon Musk and Kissinger and Einstein and Benjamin Franklin. I've also loved a lot of other authors and read just recently FDR and Titan, which is Rockefeller. I think seeing other people's lives and understanding kind of what it took for them to get through and what enabled them to be successful is really motivating to me. I also just finished a fiction book, which was really interesting, Atlas Shrugged, which was fascinating. And I was motivated by Ken Mullis, who I actually interviewed about 2 months ago. And he said he had read it 4 times, and each time had an inflection point in his career. And so before I met with him, I read Atlas Shrugged. But anyway, I'm a huge
Nice.
fan.
Nice. Well, I'll definitely take some of those titles, and I wasn't aware of the last one that was recommended by Ken Modis, but a good recommendation coming from him, so I'll definitely pick that one
Ayn
up.
Rand is the author, a really famous author. Yeah,
Okay, thank you. And final question, David, before I let you get back to it. If
sure.
you could go back and give one piece of advice to your younger self starting out, what would it be?
Surrounding yourself with other entrepreneurs, builders, and other people that motivate you, I think is really important. There's real knowledge to be shared that can help you jump forward in big leaps. I think having people that you can just soundboard ideas with. And I think you need to find people that are not just your family or close friends and not just colleagues. The ideal kind of people are other people in parallel industries or other things, other kind of builders that you appreciate. And I think that really can help you grow. And that could be mentors or other type of people like that. When you're building, I think quite often you think you're the first person to tackle whatever it is that you're tackling. And the reality is there's so many parallels out there in the universe if you find them, especially if you find the people who've been tackling them. They can also really motivate you to up level your game. I think at every stage I've gone through, I've seen people around me who were playing at a whole nother level. And as I got to know them, I said, you know what, I can do that too. And part of what motivated me was knowing them and saying, if they could do it, I can do it, or I can lean on them to really help me. And so I think finding that, and I think it's not only in person, I think that's also why I've really leveraged things like biographies and other things where learning a lot and just becoming a student of the game is critical. And not enough people really fully absorb everything they can as far as knowledge out there. And I think it's helpful.
I love that. Well, a great way to finish today's episode, surrounding yourself with those people that inspire you and you can learn from, and having more of a diverse network, having the mentor. So I love that. So I guess all that's left for me to say is thank you so much for your time. Thanks for joining us today. I'm pumped to get this out to the audience. I'm sure there's going to be a ton of takeaways for our listeners. So thank you, David.
Thank you, Peter. It's been a great opportunity and really appreciate it. If anyone wants to reach out, happy to connect with people. I'm easy to find on LinkedIn.
We'll put your link in the show notes as well for ease. Super. Thanks, David.
Thank you, Peter.
This episode of the podcast was brought to you by the Investment Banking Leaders Club. And to keep leveling up your career, join the club at ibleadersclub.com for exclusive insights, leadership strategies, and career growth resources straight from the industry's top professionals. I want to say thanks to our key partner, Outram, the global leader in financial deal gifts, awards, and recognition, for their ongoing support of our mission to empower both aspiring and senior investment banking leaders. I really hope you enjoyed today's episode. Thanks for tuning in. And until next time, best of luck on your growth journey.